Good morning, everybody. It's Monday. The sun is shining. I've had a good weekend. I'm not going to lie, feeling quite happy today. So give it 10 minutes and Michael will knock the shit out of that feeling. But there we go. This is the Morning Blast. This is your very candid morning market update from myself, Ryan, and of course, Michael. We do not pull our punches. We do not edit these. These are all kind of very raw and candid, as we said. Think of it as more bar side than fireside. Absolutely fuck all is trading or investment advice. Yada, yada, yada. Morning to everyone, especially those listening in live. Michael, how are you?
Yeah, very good morning to you, Ryan. Good morning, everyone. Well, it's been quite the start to the trading week, and I must admit it was not the best weekend after that utterly dire performance from the Arsenal at Wembley yesterday.
It's just the Carabao Cup. No one cares. No, I'm pretending it didn't happen. I'm pretending it didn't happen. No, forget it.
I just hope that the wheels aren't starting to fall off. But of course, the silver lining in all that is it does look increasingly likely as if Spurs are going down.
Yes, well, exactly that. To be honest, here's a question for you. Question for the floor. If you could guarantee Spurs got relegated, would you take us being picked at the post in the league title race?
No, absolutely not in a million years.
I don't know. I know some people that maybe consider that.
No, no. We haven't won the league for 20 years. As much as we hate Spurs, we've got to prioritise our own success first. And if they fuck it up, that's just like the little cherry on top of the cake.
True. I'm on your way of thinking. I'm just throwing it out there. What else was going to? Oh, this just crack on, I guess, because there's a lot to talk about.
Yeah, I mean, Clive sent us War and Peace on WhatsApp, hasn't he? So we may as well get to that.
Oh, I shout out to Clive. Saw him on, what day was it? Friday? Saturday? I can't remember what day it was. And his lovely girlfriend. So that was nice. I was trusted to be in her presence.
I was going to say, I hope she is still his girlfriend after whatever you.
I was told I did very well. I think Clive was utterly shocked at how well I behaved. But anyway, moving swiftly on before I say too much. As Michael said, market updates and levels to watch in the futures markets via our dear friend Clive Lambert over at Futures Techs. Equity starting off there. S&P below 65.25 this morning, which is a significant level on the weekly chart. That was about point back to in November. And if it breaks here, the next downside target is 6,200. The DAX back at levels last seen in April, having broken 23,105 last week. The next major support area is 21,450 and 2 up to 21,535. So that kind of area of interest. FTSE futures back below 10,000. Boo. The 200-day moving average sits down at 96.30 with 95.57 as another downside target from the fibs. In the bond space, bond futures had a heavy Friday and have been as low as 124.80 overnight. The eye is on the 124.67 low from last March. Below there, we're looking at levels not seen since 2015, back when Michael was just a baby.
Yeah, 1 year before I entered the market.
There you go. Long gilt. Sorry, that was a very weird night. Right, moving quickly on. Long gilt futures
are fucked.
Last printing level in 1940, which is just before Michael got entered by the market. Crypto, so yeah, one for Rachel Reeves there. Crypto, Bitcoin.
Actually, just on that, while we're talking about gilts, it is worth bearing in mind that looking at things on a yield basis, I know you don't trade the yield, but we are the 10 years now 56 basis points above where it was when the OBR did all their forecast assumptions back in March. So quick bit of back of a fag packet maths suggests that is about 8 or 9 billion quid of the 22 billion headroom gone. And that's obviously before you consider any of the sort of fiscal packages or energy support that is increasingly being mooted in the press. So it looks like the doom loop is going to continue for another year.
No, absolutely. Yeah, hold that for a second. I've got something to talk about on that front in a second. But hold that. Let me just rattle through Clive's updates first. So Bitcoin got down to 67,500 over the weekend, put some distance on that 74,500 level that we keep coming back to, or we keep mentioning at the very least. Metals, gold and silver. Gold, obviously the yellow metal. Silver continued to fall. Gold has been down to 4,100 overnight, hitting its 200-day moving average, which sits at 41.44. I know a lot of people will be using that 200-day moving average as a line in the sand, hoping that this is what holds. Certainly something that me and Michael look at, the 200 days and stuff. So one to keep an eye on, definitely there. Silver is trying to recover from a low of 61.21, which tagged the key Fibonacci level at 61.56. Platinum and palladium are following suit. Copper, unfortunately for Ryan, put on a heavy candle on the chart on Friday, both on the LME and the US counterpart. Everyone, including, well, me especially, is hoping this bounces because I'm long copper. Energy markets, Brent crude didn't follow Thursday's big shooting star reversal candle with a bear follow-up through on Friday. So still looking higher. Obviously, we did gap, as is usual, gap higher on the Sunday open, come straight back down and close the gap. Obviously, it depends on when you listen to this. It could be fucking anywhere.
Literally.
Could literally be anywhere. More on the Middle East updates in a bit. And the next levels are 119.50, then 125.19, and then 139.13. WTI back above 100 as Clive went to print. TTF, which is obviously the European benchmark gas, which is getting all the headlines at the moment. TTF is a relatively quiet start to the week, no gap at the open, which is unusual for a Monday in that market of late. EU carbon markets are on the back foot this morning after solid gains on Friday left a powerful bullish engulfing pattern on the daily chart. 65.28 is the Marabouti support level to watch. And finally, from Clive, agricultural markets. In the US, obviously, we only really talk about US agricultural market, none of the Matif French grains or any of that in this show. Grains are bid this morning. Corn is up to 473.4, eyeing the recent high at 476. And that's it from Clive. Thank you very much for the update. He did make a very valid observation when we were out, the three of us, on Friday. I'm sure it was Friday, which was, I seem to read these far better when I'm really hungover. However, today, sober as a judge, and I think I did quite well. So I'm patting myself on the back for that one.
Very good. Well done, Ryan. I'll give you a sort of metaphorical pat on the head, and thank you to Clive as always.
And I'll take that pat on the head. Thank you. Right.
So where the fuck do we start this morning then? Because I must admit, when I was sat at the desk, watching the markets close up on Friday evening, I thought
off that. You weren't sat at your desk on the market close on Friday evening. You were.
I was sat at my desk on the market close on Friday evening. I will have you know, because I was, because I went out for lunch for about 4 hours. I was catching up on stuff I missed.
Okay, so you're saying that as a fart, right?
Yeah, I have 4 screens, but I could see about 16 in front of me at that point. Anyway,
before we just crack on to that, one thing I just wanted to just go back to the gilts a sec.
Oh yeah, let's do that first, and then we'll do the Middle East stuff.
Just one thing I wanted to kind of raise and flag with you, really, and see what your opinion on this is. Obviously, we had the trust turmoil, and obviously she got booted out, her and Quasi, who I happen to see Quasi at JJ's Cigar Lounge.
Giggling away.
Yeah. Oh God, he does sound. I can confirm he laughs like a Japanese schoolgirl. I can confirm this. That's where the comparison ends. Moving swiftly on, and I've been seeing him at the JJ Fox Cigar Lounge quite a little bit now recently, which is nice. Still haven't said hi. He's not come over and said hi yet, so I don't know what he's waiting for. But obviously, that was very tumultuous. But it was a flash in the pan, right? And things went back to where they were before this kind of pre-budget kind of leak and whatnot. And markets got a bit carried away, not helped by the media. I think the difference that we have now is this is structural. This feels very much like no matter what happens, the gilts aren't going to just turn around overnight like we saw with Truss. This feels like there's a lot more pain and it's going to take a while to turn around, and we could be in for some serious shit. What are your thoughts on this regarding the gilt market? Do you understand what I'm getting at?
I completely understand what you're getting at, and actually I think it is important to draw a distinction between the two, because there is, in certain sections of the media, and certainly among the chattering political classes, Tris Osborne, I'm looking at you absolute lemon. There is a temptation to, any time that gilts sell off, to basically go, it's Liz Truss all over again. I think the big difference between then and now is actually the makeup of the gilt market. And what I mean by that is who is trading in gilts, because one of, if not the main reason why we saw so much turmoil in September and October of 2022 was because of the LDIs that basically were forced to unwind their positions as yields rose and rose and rose. So that exacerbated the issue. Firstly, it also meant that actually when the Bank of England stepped in to try and restore more orderly market functioning, that worked because it meant that those LDIs were no longer forced sellers, which actually restored a degree of calm to the market. And you obviously had a degree of a sort of U-turn when Jeremy Hunt came in as Chancellor, but it was more the market, the makeup of the market, the structure of the market was the issue in 2022. I think the issue now is not the structure of the market. Well, actually, maybe it is to a degree, because at the same time, you've got lifers and pension funds which just aren't participating at the long end anymore. So it's all just hedge funds and discretionary investors. So over the last 2 decades, and there is a note on this somewhere on the Pepstone website if anyone wants to read it, we've gone from the long end of the gilt curve basically being what you reasonably term price insensitive buyers, just insurance funds trying to hedge out their risk for 30 odd years, to price sensitive buyers, which are hedge funds, family offices, discretionary investors, etc., etc., etc. So that's going to play a role. The second thing that I think this is very different to what we saw with Liz Truss is actually this is being driven by concerns about the fiscal backdrop, which is clearly sustainable. And that is the reason for me why you see anytime there is a significant sell-off in government bonds across developed markets, obviously of the ilk that we're seeing now, you see gilts vastly underperforming peers. You know, even just looking at a sort of cursory glance across the screen this morning, the 10-year Treasury yield is up 3 basis points. The 10-year Bund in Germany is up 1 basis point. The 10-year JGB overnight was up 2 basis points. The 10-year gilt yield, 42 minutes into the trading session, that's up by 5.5 basis points. So again, it's a case of, gilts naturally underperform because markets are starting from a dimmer view of the UK's fiscal backdrop.
Yeah, no, exactly that. And I'm glad I asked the question because you've summed it up extremely well. So thank you for that.
Thank you very much. It does actually also, in a way, it's easy to solve because it just needs the government to change their mind. In a way, it's very difficult to solve because the government are never going to change their mind.
Yeah, exactly. Or you could have just left off their mind and just say the government
would change. Yeah, exactly. But yeah, the Middle East situation. So moving on from that,
we are in day 23 of the Thunderdome, also known as Operation Epic Fury. I think. Yeah, let me just let me just summarize what's going on, and then you can dive in where you think.
Yeah, go on.
Obviously, day 23 of the Thunderdome, weekend brought conflict to a genuinely dangerous new threshold in, I think, by many people's opinions, not just mine, mainly because Trump issued a 48-hour ultimatum to Tehran, which was fully open the Strait of Hormuz will face obliteration of Iranian power plants, starting with the largest and then working down. The deadline for that expires, this ultimatum. The deadline for this expires tonight at around 23:44 GMT. Now, because he bases this off the time he sent the tweet, Iran came straight back and has said if those power plants are hit, it will completely and permanently close the strait. So the two sides have effectively drawn red lines on top of each other. Now,
well, they actually said slightly more than that. Sorry to jump in. But yeah, you're absolutely right. They did say that they would completely close the Strait of Hormuz and that they would not reopen it until any damaged power plants are rebuilt. I would say more importantly than that, the Iranians also said, and I'm going to quote here from state media, they warned that all energy, IT and desalination infrastructure belonging to the US and Israel in the region would be legitimate targets if Iran's energy infrastructure is attacked. So it's not necessary. So yeah, they are drawing sort of red lines on top of each other, but it's also kind of it is a significant escalation. If they start targeting desalination plants in the UAE or power plants in Saudi or whatever it may be.
And one thing to note on that as well, and one reason why I think this is quite a bit of an escalation here is there's no obvious off-ramp. And what he's seen in the past over the last few weeks, and also Trump in general, he always does seem to leave an off-ramp. Now, you might have to kind of pull apart the tweet a little bit or pull apart his messaging, but there always seems to be a little glimmer of an off-ramp. It's hard to see that here. And with Iran coming straight back as well. It's hard to see that side. Regarding the desalination plants, something to raise here. Yeah, we've seen a lot of chatter over the last, 24 hours basically, of Gulf nations saying to, sources from Washington, etc., and also sources from the Middle East saying that Gulf leaders are actually saying to Israel and the US, they've got to carry on now. They've got to carry on bombing. It's gone, basically, you've passed the Rubicon, as it were. Look at that. And you need to finish this off. Now, Saudi have also stated that they will declare war on Iran unless Iran stop hitting, or if they start hitting any more energy sites connected to Saudi. Regarding, I mean, one of the reasons why I wanted to bring this up on this section here is the desalination infrastructure, because the way, there's a hell of a lot of Saudi crude and gas and whatnot that relies on water being like pumped into the systems and stuff, like keep pressures up and stuff like that. And someone put a really good post up at the weekend, although I can't find it now, so whether or not he's deleted it or whatnot, but basically there's a huge desalination plant in Saudi Arabia, just across the strait, as it well, just nearly from Iran. And if this is targeted, then that's a lot of production that's going to be at risk in Saudi. So yeah, this kind of expansion of verified targets and whatnot that are now in the line of sight, definitely an escalation. So yeah, what are your thoughts, Michael? What are your thoughts? We need to get over some cup of tea and some bacon sandwiches and getting. I swear that would fix everything.
Well, I'm not sure a bacon sandwich would fix things, given where we're talking about. But we could give it a try. Yeah. To be honest, I'm just going to caveat this by saying absolutely no one has any idea exactly how this is going to pan out.
No one.
As we move towards that quarter to midnight deadline here in London. Absolutely not even Trump. There is an argument to say that actually this is, the whole escalate to de-escalate playbook all over again, and he's hoping that the Iranians will kind of back down. There's an argument to say that it is a genuine threat, and actually this could mark a dramatic escalation in the conflict in the Middle East if Trump were to follow through on it. There is also potentially a scenario where, Gulf leaders potentially lean against President Trump, saying, we really would rather our desalination plants don't get blown to bits. So can you kind of hold off on this? And there's some sort of fudge, which means Trump is able to back out of the threat. In short, no one has a Scooby. Just to give you an idea of how quickly the landscape is changing, it was only about 18 hours, 24 hours before this ultimatum was issued that President Trump was saying on Truth Social that the US is very close to meeting their objectives and that they are considering winding down military efforts in the Middle East. And then 24 hours later, we're talking about, potentially the conflict moving to an even more significant level in terms of kinetic action. So I think really the only way, from a market perspective, the only way to play this is to simply wait and see. And while you're doing that, hide out in safe havens. And the dollar is really the only haven of note at this point, because obviously, going back to what we've discussed previously, do you really want to be buying government bonds in an environment where people are worried about inflation? No. Do you want to be buying gold in an environment where yields are rising so significantly? No. And the fact that gold's off 7% and silver's off 10 this morning probably speak to that quite well. Do you really want to be ramping up exposure to equities right now, given the uncertainty? Probably not. So yeah, I think unsurprisingly, and from speaking to various market participants this morning, it's just a case of no one knows what's going to happen. And also, is this even a real deadline? Because we know that President Trump has issued deadlines numerous times, and they have been, well, let's say flexible, to put it diplomatically. Is this another example of that? At this point, we simply do not know. And to be honest, anyone who tells you they do know is talking nonsense.
Yeah, quite well. I'll go further. That utter bollocks is what I would say they were. But a couple of things to note on this is Trump could very easily just tweet, "Oh, I've heard from Iranian sources that they don't plan on doing anything. Therefore, they've learned their lesson," kind of thing.
Well, and actually, sorry, just on that, it is worth bearing in mind that, and actually that is a very good point. He could do that at any minute, but it is also worth bearing in mind that uh, official comments from Iranian government, Iranian civil servants, whatever, have never actually said the Strait of Hormuz is closed.
No, no, they said they will. They
So
said they will, like, what is it, irreversibly close it if this happens or if this does.
yeah, and I know this is kind of word games and playing with language, but again, there is probably a world where Trump goes, oh, well, they've never said it's actually closed, so yeah, fine, whatever. We'll carry on as we are. Again, I'm not saying that's going to happen, but you can imagine a path to that happening.
Yeah, hopefully we'll know more tomorrow morning, but God knows in this situation. But obviously, very, very conscious that literally all we do all the time, well, not just us, but everyone at the moment, this is all they talk about. So we will move on to other things to watch out for this week in a second. But before we do, just a couple of, I think, key updates are worth mentioning over the weekend. We've now got, if we remember back to Thursday, Friday, Trump had literally no one else willing to kind of join them in trying to keep the strait open. But now have 22 nations have said they're willing to help secure this Hormuz navigation. So that's, something, put some wind in the sails for Trump there. See what I did there? Nice little nautical pun for you. We've also had Lebanon's president is offering to disarm Hezbollah and negotiate directly with Israel. So potentially a bit of, glimmer of upside there, which is nice. But more importantly, just something I wanted to make sure everyone's aware of. I know everyone should be, but, you can't be too careful. Goldman's came out and said, elevated prices through 2027. I think this ties in, nicely with, something we all have to be aware of. Even if everything tomorrow, even if I clicked my fingers and the war's over and everything's back to normal, it's going to take months, minimum months to get production back up to speed. We're talking like 6, 8, 9, 10, 12 months for some of this fully to come back up to speed. There's been a lot of damage to infrastructure already. Builds just don't come back on and start. It's not like turning a tap on your bath. I think we're going to, my personal view is we haven't even seen the knock-on effects really hitting, significant like food prices and stuff with fertilizers and whatnot. I think that's, stockpiles will run down. We're already seeing the airlines saying, look, we've only got, I think I saw something the other day, it was like 23 days of fuel left. Some people saying for some jets, for some aviation companies and whatnot. But I think there's going to be a lot of follow through, even if it all finished off overnight. And I think we're now getting into that period of the situation where we're going to start seeing these secondary impacts start coming to light and getting some press coverage. So this is just one thing. I think we're going to enter a new phase almost of the kind of the coverage we see on social media and news and whatnot. So I just wanted to flag that.
No, I think that is important to flag. And I think, again, at the moment, there is just so much uncertainty as to exactly how all of this is going to shake out, not only in terms of actual military action, but also the spillover effect of it as well.
Yeah.
I think the other thing that is worth pointing out along the lines of energy, this is why energy infrastructure is of so much concern to markets, because if you are, cutting production because you run out of storage, but the facilities are all, in full working order and in good health, then yes, it takes a few weeks to get things back online. But once Hormuz is unblocked, you are back online and you are good to go. If you actually have damage to those facilities and you need to repair that damage and then turn everything on again and then get transit out through Hormuz, that's clearly a much more elongated process. That clearly keeps supply conditions considerably tighter for considerably longer. And as a result, that obviously has, bigger growth and inflationary implications.
And also, I promise we will just have a quick look at the rest of the week after this. And also, put yourself in the position of, say, like the Qatari national, gas company and whatnot. Are you even going to bother starting to repair these facilities until you are absolutely sure they're not going to get hit again?
Well, quite. And also, that's not only from the perspective of, are you going to do it because you're worried that the work you do is basically going to be unwound, but it's also a question of, are you going to, essentially be happy to put your mechanics and your repairmen or women, well, maybe not women, in harm's way, effectively.
I'll be very honest. I'll be very honest. I don't really think oil and gas companies care too that much about that, considering I know what the day rate for people having to do.
Well, no, I understand. There's that, but
I know what you're trying to get at. But I don't think the same rules apply over there when you think about how many people died putting up football stadiums. But I see your point.
Yeah.
But anyway, what else have we got to look forward to this week briefly?
Yeah, I will keep this relatively brief. And actually, the data docket this week and the economic calendar is considerably quieter than it was last week. So it is very much going to be another week where we're all focused on geopolitical events. In terms of the calendar, though, there really isn't anything worth keeping a close eye on today. Moving through the rest of the week, though, we have flash PMI numbers due on Tuesday. These will probably take on a little bit more importance than normal because they are kind of the first proper top tier data point that we've had referencing March. And obviously that will start to show us the initial impact of the ongoing Middle East conflict on the global economy. You would naturally expect all three of the manufacturing, services and composite gauges to roll over a fair chunk compared to where they were in February. On the back of that, besides the PMIs, we have a handful of inflation prints. We get Australia and UK CPI numbers on Wednesday, both of those referencing February though, so they are of course before the energy price shock. We also have retail sales out of the UK this week. That comes on Friday morning. Besides that, on the monetary policy front, of course, we continue to see a big hawkish repricing of policy expectations, bordering on ridiculous at this point. Markets now pricing 4 Bank of England hikes, 100 basis points of tightening by the end of this year. I think we've got about 3 25 basis point hikes from the ECB
You know what?
priced by the end of the year. Go on.
You know what? Let's, assuming that the wheels don't absolutely fall off in the Middle East overnight and whatnot, let's maybe see if we can put a bit of time tomorrow on this repricing, because it is a massive story. And I think, like you said, I think everyone's got a bit carried away here.
Yep, that works for me. We can definitely do that. On that note, we do have a policy decision from the Norges Bank in Norway on Thursday. They're set to stand pat, but obviously guidance will be important. More importantly than that, though, we do have plenty of central bank speakers throughout the week, including ECB President Lagarde. She speaks on Wednesday. Bank of England Chief Economist Hugh Pill, he is speaking tomorrow. And then there's a whole host of Fed speakers throughout the week as well, which are obviously going to be in focus given how markets have dramatically repriced, as we'll discuss in more depth tomorrow. And lastly, in terms of scheduled events, do just bear in mind that there is a fair chunk of Treasury supply this week. We've got a 2-year auction Tuesday, a 5-year auction Wednesday, a 7-year auction on Thursday. There have been some terrible takes flying around on this one, by the way. I saw a number of people over the weekend saying, they're emergency Treasury auctions, issuing debt to fund the war. It really isn't, guys. Just to point out that the US do these series of auctions every month, and actually the size of these auctions has been unchanged for as long as I can remember, at least the last 6 to 12 months, if not longer. This is normal cash management from the Treasury. There's some bill auctions as well. It happens every week. Though it's not a sign of panic. It's not the US on the verge of bankruptcy. Again, people saying that sort of shit are just showing you that they don't really understand the Treasury market without saying that bit out loud. But of course, setting that aside, it is going to be the case that geopolitical developments and the goings on in the Middle East are, again, the main focus as we move through this week.
Absolutely. And look at that. Somehow we've managed to finish on time. Still have no idea how this happens. I'm guessing you look at the clock, because I certainly don't.
That's exactly how it happens, me.
Okay, fair enough. Michael, absolute pleasure as always, my dear friend. Wishing you and all the listeners we have a marvellous week ahead, a profitable week ahead. Remember to stay out of trouble, keep it tight. Hopefully we put a smile on your face and a bit of value into your day this morning.